Many backward steps are made by standing still. Kevin Kelly. My friends, if you don't start today, when are you going to start? When are you going to commit yourself each and every day, 10 to 15 minutes following these charts with us? Again, standing still means you fall behind. If you are not moving ahead, you are dropping behind. And 10 to 15 minutes, that's what it takes to start learning this. Yes, spend time reading our book. Yes, spend time listening to the videos that we put out every day. We have a great one for subscribers today, which you can do for free at chartingwealth.com. How to master the charts. You'll get valuable information to understand what it is we do here every day. And primarily, it's real simple. We look for weekly vertical crossovers, which show us sea changes in investor sentiment, up or down, fear or greed. We saw a weekly vertical crossover occur most recently on the S&P 500 back on the week ending the 9th of April. And all things being equal, markets tend to move in the direction of the largest chart, with these weekly vertical crossovers being the real magic. And again, if you practice, if you spend a little bit of time following the charts with us, filling out your daily market worksheet when you do trades, trade worksheets, those are available for free in your show notes every day. Those show notes come to you every day. How? By subscribing at chartingwealth.com. Let's jump into these charts. S&P 500 up 0.80%. The Nasdaq 100 up 0.75%. 20-year bonds up 0.16%. Look at gold, a booming. And I have something to show you on the half day, the 2-day, and the weekly, but particularly how important it is to enter on that weekly vertical crossover. I'll show you when we get there. And of course, we see Bitcoin up a little bit for Bitcoin for the day, 1.48%. Now with a stock, that would be great. With Bitcoin, it's just an easy day. Now let's talk about the S&P 500. We have a red spinning top. It means a slowdown in the up movement. You can see prices still above that gold trend line for the weekly chart. Price percent oscillators flat but positive. Derivative oscillator gaining momentum. Look at the 2-day. Did not manage to cross over. It's slipping sideways on us. Now remember, the price percent oscillator gets real difficult when things start slipping sideways. It gets sloppy. So we want to see movement for us to be able to count on the price percent oscillator. Derivative oscillator losing momentum, still barely positive. Where's the S&P? Is it going to start booming up again? Up nicely for the day, but some inherent weakness there. We can see 2 penetrations over the last 4 days of the weekly trend line. And of course, we've moved through the 2-day trend line. So there is inherent weakness there. Looking for points to take your profits is not a problem. Again, you set your profit and loss bands at the beginning of any trade. Now, what do we see going on the half day? Lots of indecision in the morning, popping up in the afternoon, but a little bit of down movement then too. But again, above the weekly trend line, but below that 2-day, even on the half-day chart. And the half-day is still negative. It is heading up on the price percent oscillator and the derivative oscillator. We'll see how that pans out. That's where we are on the S&P. What about the Qs? Well, looks like we may very well end the week with a lamination and a return to the down movement. We'll see. It was up for the day, 0.75%, but that doesn't make up for the red down candle. There's a little wick on top, longer wick on the bottom, so that pressure is for a down move, and we may very well end the week with a weekly vertical crossover going down. What does that mean for you? It means potential opportunity. Pay attention to what's going on there. Look at the 2-day. It has already crossed. We've had 4 days of pretty strong down movement. So pay attention to those things. We'll redraw that trend line right now. Derivative oscillator accelerating down. Also, half-day chart. We can see where things boomed down on Tuesday. We touched that in the morning, close to it in the morning on Thursday, and then up a little in the afternoon. So again, the half-day chart is still down, But again, it's flat on the price percent oscillator, derivative oscillator, losing downward momentum. So watch your bigger charts where you've got a lot of downward pressure there. And of course, shorting opportunity, the close of the market on the cues for tomorrow. So pay attention to that. See what the charts show you as you get later in the day. Could be a booming up day, make you feel very uncomfortable jumping into a down move. Could be a down day and make you feel comfortable doing that. So again, practice trade. Practice trade every opportunity that you get where you think that if you were trading real money, you would probably do it, or do it as an experiment to simply learn from. Regardless, paper trading doesn't cost you anything, but do invest the time and energy to make sure you understand why you're doing it. How do you invest that time and energy properly? You fill out your trade worksheet. I'm going to include that at the end of the show notes today. Very important to understand how to fill out the trade worksheet. I'm going to put that video in at the end of today's video. Let's move on, leave stocks, go to bonds. Of course, we had that weekly vertical crossover last week, the week ending the 30th of April. We see a green spinning top as the week moves along, derivative oscillator heading up, price percent oscillator slowly moving away from the red signal line. We can try to redraw our trend line as best we might can to connect three candles. Still get difficult though. Not a lot of strong up movement this week as far as the Heikin Ashi candlestick goes, but we do see the price percent oscillator pulling away. What do we see on the intermediate chart? Again, heading up. Derivative oscillator still positive, but losing momentum. 4 days of up movement. Price on the 2-day chart is above that weekly trend line. We will need to redraw the 2-day at some point. We could do that now if we so desired. Again, we like to connect 3 candles. Can we? No, not really. So we'll go with the 2 greens. Not a great trend line there. Not something you would hang a hat on much. But again, bonds moving up. That's nice to see after 2 days of down movement following the weekly vertical crossover. Well, really Monday. And we see Tuesday, Wednesday. Well, that would be, let's see. Let's check, make sure. That would have been Thursday, Friday, and then Monday, Tuesday, Wednesday, Thursday heading up. Half day, what do we see there? Half day crossed over after a big booming up on Tuesday morning, and then Tuesday afternoon slacking off some Wednesday morning, but then started accelerating Wednesday afternoon and Thursday. Good to see things moving up there. That's where we are on bonds. And again, things moving in the right direction with the price percent oscillator pulling away from the red signal line on that weekly chart. Gold. Now, this is where I want you to pay close attention to what we see happening. Gold crossed over going up back on the week ending the 23rd of April, 2 weeks ago. The next week, we had a lackluster week with a red open box spinning top. It wasn't a solid red down candle. That red open box means a slowdown in the up movement. Price percent oscillator continued to pull away from the red signal line. Derivative oscillator gained momentum. But it was crappy. It was actually lower, was not going in the right direction. It was sloppy and not beautiful. But as things wore on, as we say, all things being equal, the market tends to move in the direction of the largest chart. When you are setting your loss bands, you want to make sure to set them as accurately as you can based upon your past experience on that stock or ETF and what your percentage loss meter is for that trade. And you set those again. All of this is based upon your experience. Now, this is where things, again, start requiring skill and practice and experience over time. What we see happening this week is a nice green up candle, price percent oscillator spiking up, derivative oscillator gaining upward momentum. We go to the 2-day. This is where you can see where things got scary. After the weekly vertical crossover, things were weakening at the end of the week. Started off lots of indecision Monday, Tuesday, Wednesday. Look what we saw happen. that week after the weekly vertical crossover. We saw a doji, lots of indecision. Then Thursday, Friday, strong down movement. Now, as things moved along, what happened? Well, we started the week off Monday, Tuesday, nice up movement. We had a bit of a pullback. You'll see that when we get to the half-day chart. And then, of course, this Thursday, Friday, things are booming. In fact, moving up above where that weekly vertical crossover was finally. Price percent oscillator spiking up, derivative oscillator after devolving started moving up on this last 2-day candle. Now, check out the half day. This is where, again, we look at this and we study this and we see how difficult it is to find an entry point. And the reason that we use the weekly vertical crossover as our entry point, because otherwise, how do you find it? How do you know when? And this is why the weekly vertical crossover works so often. We jumped in, and then what happened? Our position weakened. Then all of a sudden popped up on the 3rd in the morning, about the same in the afternoon, but no crossover. Didn't give you, if you were trying to use the half-day chart as a trigger, you didn't get it. And don't forget, you can't use the 2-day because it had already crossed over way back on the 19th, way before the weekly vertical crossover. So you look at, and you might say, well, why don't I just use the 2-day all the time? Because the 2-day doesn't work all the time. It can get sloppy on you. You can look at it. The smaller the chart, the more you can see things spike up and give you difficult times as compared to a bigger chart like the weekly. And we've tried this again and again and again. Those of you who've been with us a long time, you remember when we used the half-day chart as a total trading chart in gold because it worked. So, getting back to the half-day, trying to use that as a trigger would not have worked. You would have seen at the end of the day, hoping to have it cross over in the morning. What did it do? It then devolved and fell. And then what happened? We saw things at the end of the day giving us a little bit of hope on Wednesday, and then boom, before you could even get it on Thursday, hammering up 1.67% throughout the course, ended the day that high. So no real ability to jump in and get that unless you had used the weekly vertical crossover. Did it get you in a little early on it? Yes, but it got you in to what is being successful now. So nothing about what we do is easy. It's simple. We're simply trying to track stocks and ETFs. Are they going up or down? That's really our main call. Yes, sideways is another potential, but really up or down. It's a binary decision. But finding those entry points and then finding those exit points, that's where the skill comes in. And that again is one reason that we have determined and settled on those weekly vertical crossovers as being so helpful to us, because that energy, that momentum tends to play itself out in the long term. Now, immediately after the cross, you may see some devolution. If it's a crossover going down, it may go up. If it's a crossover going up, it may go down. But things tend to, in charts that are chartable, that you've gone and backtracked and watched and seen how things work on those charts and verified that your weekly vertical crossovers are accurate 80% or so of the time. When you see that, that gives you a reason to know that you're betting with the house. If you want a gambling analogy, which I am not very apt to use, but think about that. So those are the kind of charts you want. And again, you use that with the common sense, with the knowledge you've developed by trading those charts for many weeks, many months, many years even, and understanding intimately the personality of the particular stock or ETF. That's enough teaching for today, my friends. Lastly, we will go to Bitcoin. Bitcoin up a little bit for the day, 1.48%. Still have that overall hang of the price percent oscillator heading down, derivative oscillator gaining downward momentum. It's nice to see a small green up candle for the week 2-day chart, flattening, derivative oscillator losing some downward momentum, price percent oscillator flattening. We see a little bit of upward movement there. And on the half-day chart, of course, it crossed over, going up back on the morning of Wednesday, the 28th of April, only to then devolve on Thursday and then start shooting up there on Friday and then dumping down again on Tuesday and then Wednesday, Thursday trying to move up. So again, Bitcoin still has that weight and downward pressure on it. That's where we are, folks, at the end of the day on Thursday, going into Friday. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.